It's a new business week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Coming up on the show, South African stocks nosedive as President Jacob Zuma orders Finance Minister Pravin Gordhan back home from International Investment Roadshow. Libya's National Oil Corporation identifies illegal efforts to sell crude oil without its approval. Plus, Ivory Coast government seeks more assistance from the International Monetary Fund as slumping cocoa prices buffet 2017 budget. Let's get started. And we begin with the markets. And here in Africa, the market in Johannesburg was in the red at intraday as South Africa's Finance Minister Pravin Gordhan was told to return home from an international roadshow by President Jacob Zuma. The rand also fell as much as 0.5% following the report, while bonds weakened shortly. Gordhan was in London for the first leg of a week-long non-deal investor roadshow in Britain and the United States as weak economic growth and ruling party tensions put the country's investment grade at risk. However, at market here in Nigeria, investors were more upbeat at intraday, with the index up marginally at 0.06% thanks to UBA earnings. Egypt was down 0.45%, while Nairobi closed up 0.56% on Friday. In the Middle East, stock markets edged lower at intraday trading as crude oil prices remained near $50 a barrel and international markets were sluggish. The Saudi stock index was down 0.29%. The largest dairy producer, Al Marai, fell 0.7%, and United Wire Factories fell 2.2% as they both went ex-dividend. In Dubai, Emaar Malls fell 0.8% after the company confirmed it was making an $800 million bid to acquire e-commerce operator Square.com. It had already dropped 0.8% on Sunday in response to a local media report revealing the bid, which could put Emaar Malls in a bidding war with Amazon.com. 22 other Dubai stocks also traded lower, dragging the index down 0.64%. Abu Dhabi's index fell 0.21%, weighed down by 8.5% plunge in shares of RAK Properties, which went ex-dividend. Qatar was down 0.08%. And in the U.S., the futures underlined a global market sell-off today as investors freighted over the potential knock on effects of U.S. President Donald Trump's surprise failure to deliver on health care reform. Dow Jones were set for triple-digit losses, down over 130 points at 9:30 a.m. London time after Republicans dramatically pulled their health care bill on Friday. On the economic data front, the Dallas Fed survey for March is scheduled to be released at around 10:30 a.m. Eastern Time. Now, Monday will also see Red Hat and Cinex among the major companies due to report after the market close. You can see the numbers there all in red. Dow Jones Industrial Average down 0.66%, S&P 500 down 0.82%, and Nasdaq tilting down 0.80%. In Asia, markets were mostly lower amid rising doubts over U.S. President Donald Trump's ability to pass legislative reforms after Republican leaders pulled a bill to overhaul the U.S. healthcare system. Japanese benchmark Nikkei 225 dropped 1.44% as risk-off sentiment prompted a rush to safe haven bids such as the yen. Australia's ASX 200 closed down 0.12%, weighed by its material sub-index, which fell 1.52%. In South Korea, the Kospi finished down 0.61% after South Korean prosecutors said they will seek a detention warrant for ousted President Park Geun-hye, who has been accused of taking bribes from big businesses. And the Shanghai Composite closed down 0.08%, and the Shenzhen Composite ended down 0.36%. Hong Kong's Hang Seng Index fell 0.71% by mid-afternoon. I will get back now to the Europe, where, of course, investors seem to be adopting a cautious tone on the back of U.S. President Donald Trump's surprise failure to deliver swift healthcare reform. It's also a countdown to the trigger of Article 50 by UK Prime Minister Theresa May, and a number of economic data on tap today. I'm being joined by my colleague at the Frankfurt Stock Exchange, Conrad Bussen, to give us an update on some of those headlines there. Good afternoon, Conrad. Thank you very much for joining us. Good to see you again. Now, we are in the final 72 hours in the countdown of the trigger of Article 50 by UK Prime Minister Theresa May. How much concerns are we seeing across the markets today, or has the trigger already been fully priced in?
Well, I think it's impossible to really say whether all this has been already priced in. Brexit is such a singular event with so many implications on, the repercussions on different kinds of assets and asset prices in the markets. It's impossible to foretell what the consequences will be eventually for all types of markets after, Article 50 will be triggered this week. What I can tell you is that, of course, traders are trying to get prepared for all kinds of different scenarios, and at the moment, they're rather seeking for the safe side. They're going into so-called safe haven investments like gold. The price for an ounce of gold has increased by $13 since last Friday. Also, German government bonds in demand, and also US government bonds in demand. It looks like, the Trump bump on the stock markets, on equity markets, is about to turn into something like a Trump slump, given that Trump's Republicans failed to, put the axe to the Affordable Care Act in the United States last Friday. That raises questions whether Trump can, continue with other promises he made during his election campaign, like, for example, tax cuts and large investments in infrastructure.